Good morning, everyone. Trader Romps here. I'm just going to be going through basically what I do for a daily prep without actually adding it into Notion. I just want to, I'll go through and I'll add that after I'm putting all the values and stuff in. But for now, I just want to do a quick run through, look at the long-term VWAP indicator, look at the TPO, time price opportunity charts. And yeah, you can just get a bit of a gist of what I do when I go through it each morning, and a few things you might not know about the indicator, few things you can toggle on and off. So when I first start the prep in the morning, one of the first things I'm going to is this forexfactory.com. I've actually got it filtered, so I'm actually only looking at the high impact expected news, and I'm actually only just looking at the USD. In that way, it's sort of just isolating those sort of bigger news events that's actually going to have uh, a bit of an effect on the market. So looking at this straight away, we can see at the early hours of tomorrow morning, we're going to have the flash manufacturing flash service PMI coming in. So that's just something that we're going to be aware of. So if you are trading around those hours, we expect volatility. So that's the first thing we put in for those people who, for a lot of us who are just awake through the day, it's not really going to affect any sort of inside day trading. However, for those who are going to be trading into later into the New York session, this is something, and this is a time to be mindful of. So doing things like this, you might even just set, some sort of an alert or something even on your phone, just to say, coming into it half hour before or something, reminder, if you are scalping or something, maybe ease off the scalping. If you are in a good trade, then you can adjust stop losses and that sort of thing. So that's the first thing we're looking at. The next thing we're doing is we go over to the long-term VWAP indicator. Now, I'll go over this through the course. I have a whole video on how to set this up, so I won't go through it, but we have the top left, we have the daily, top right, 12-hour, the 4-hour and bottom right, and the 30 to the 1 hour, sort of adjust between the two for the bottom left. What they are is top left is the yearly, the top right is the quarterly, bottom right is the monthly, and the bottom left is the weekly. And that's how we've broken up these long-term VWAPs. So something else you see that I have on as well is on all of these charts, because it's relevant at the moment and it's not too messy to see, is I have the extensions of value on. So essentially what that is when we have, for instance, the actual VWAP, which is the line that runs through here. When we move away from that by 1 standard deviation, this just becomes the developing yearly value area high. When we move below that 1 standard deviation, we have the developing yearly value area low. But there'll be times where, you'll see, say over in this area here, you'll see like in this area through here, we still are rejecting off deviations based off of the actual VWAP. So if we get this big clean breakout, we start trending, then all of a sudden it's this open sky. Well, this is where you can go into the settings here and you can add on, just under the standard deviation bands, you can actually add these extras on. So I've got 2 and 3 on at the moment. Generally, I'll have 1.5 and 2, but obviously as volatility picks up, you can start pushing these out and just sort of adjust them to see where we're rejecting from, and it can give you a little bit of an idea as to where we'd reject. So as we can see, we've rejected past here. We actually got above the 3. So this is in this area here. We may have removed the 2 and then been looking for a 3.5 or a 4. But as you can see here, like looking at the 3 sort of held it down here, it held it back here, and it held it back up this area here. So what are we going to do from here? Well, we'll be looking at where the last one stopped off, is currently where the third deviation high, so that would be the +3, comes up here. So around this 1200 mark is going to be an area that we're going to be looking for some sort of resistance. This is where we don't want to be opening longs. We might be thinking of hedging, shorting, that sort of thing. But, it's just helping extend those sort of targets and those sort of trading boundaries based off that alone. So that's what these extra squiggly lines that you're seeing, generally we just come with just the VWAP because it's a lot cleaner. And there'll be times as well, this is just irrelevant, it's just mess on the chart. I like to try and keep my charts as clean as I can. So what I'll be doing from there is I can obviously just go in and toggle those back off. So they're the extra standard deviations that we have. The something else as well that we were looking in the chat, we've actually got one come up on the 12-hour, is these high volume points of control. So what they are is they just add this little array that comes off a certain area within inside a candle. Now we look at the settings here, and we come down, we can turn it on under this section down through here, which is the high volume candle point of control. If we toggle this one on here, the settings that it comes out of the box are good. I don't actually adjust them. The main thing we're doing is we're looking back within the 30 candles. It's using a smooth moving average of 50. It's looking back over the moving average of the last 3 bars, so the last 3 candles. But what it's going to do is it's going to ignore everything under 125% increase. So going off that, if we look over here at that 125% increase, we can see within inside this wick, there was 125% increased volume at this price point, coming in at 105,480. We'll call it that, or 470. Somewhere in that area, when price gets to, we have to realize that there's going to need to do some mitigating. So how we can also look at something that's happened in the past is this candle through here. We can see that we had this high volume point of control and a perfect short pretty much went straight in off there and it rolled over. So what's going to happen now is the same thing when it comes up to here. It may or may not, but we need to be aware that that would be a take profit point for a long, or it could also be yet again a hedge or a short position to roll back over again, if that makes sense. So that's what the high volume points of control are. They're just isolating the POCs, that are above that that percentage, and there'll be plenty of times that price just shoots straight through them. It could be because when that candle was made with that amount of volume, respected to the new volume that's actually coming in, it's nothing, and it just shoots straight through it. Or if it's come up on really low volume, or like a short squeeze, like a liquidation drive, that will be a point where I can really cap and absorb, and then turn back around again. So they're just 2 extra little things that we haven't fully covered. But if we actually just go through the analysis of what's happened now, we have a fresh, brand new day. So we start at the highest time frame, and that's what we're doing at the moment. So I won't go into sort of looking at order blocks and stuff. I can put that in the prep. I just don't want to take too long actually sitting around doing that. I just want to look at this base solely on this indicator that we have at the moment. So what are we looking at right now? Okay, so what we have is, the first thing I'm going to do is actually just look at the naked price action of everything. So if I were to just turn this off at the moment and just have a bit of a look at it, you can see at the moment that we have the potential at the moment for putting in a bit of a Morningstar reversal, like sort of an internal one here. So we have that doji, a bit of indecision at the moment. It can go either way. Obviously, we don't just go, it looks like it can, we hope it will. It can definitely drop down a lot lower, and it can go a lot higher. So what I'd say is we can see that we have a bit of an inside day here. So with the inside day, it basically means from that low wick to that high, we're going to be trading with inside here. Now, when we get to TPO, and that's just the price action version of it, it's probably we're going to find out we'll now be going from a 6-day to a 7-day composite. So what will actually look like is it could be something more like here, and this would be the value area high and the value area low of that area. But either way, if you're just a naked price action trader and we've opened within here, we expect rotations within inside this candle until we get something very clear, acceptance above, acceptance below, or just rotations within inside it. So an observation you could say is this is also a 30-day rolling VWAP that I have through here. So to put the 30-day rolling VWAP on, you come up to indicators, and if you just type in rolling, and it'll come up rolling like so. If you apply it to your chart, you double click, this is where you can, on the indicator or up at the settings, you can come in here and you can use a fixed period of time. So I've got 30 days or 30 plots essentially. But yeah, the 30 days on the daily, it's obviously going to be making it thereabouts a month. And that's just going to be rolling along for the month. And what you will actually find is actually quite a good little indicator is sort of when we're above it, when we're below it, above it, below it, etc. Sort of oscillates like a normal VWAP, but we just get a bit of an idea when we're really deviating away from it. Like always, that's where we can be finding the longs. Deviating away, we can be looking for the shorts back towards the VWAP line. But generally, I'm not really going to use this to trade off because we have the LTVW. I'm looking at this just more for an imbalanced state or a chop state. So obviously you can see where we go sideways and it evens out a bit. It finds it, a little bit harder to get through. And then when we're moving well above it, we've got to reclaim through here. We've got to bounce off it here. You can see how this is just helping that assistance on a 30-day rolling VWAP of an imbalanced up state. Okay, so we'll move back over now. We'll turn this, we'll turn the VWAPs back on. We'll have a little bit of a look at how the market's going. So we're just looking at today's price action based on the LTVW. What we can see is between the developing yearly value area high, which is this band through here, and the standard deviation 2. There has been a fair bit of compressing. We have this inside candle. What we want to see ideally is tomorrow's close on the weekend still above this. We don't want to see it deviate too low, because basically once we get to a point where we start taking out these lows here, we're getting back to around that VWAP section, which obviously is a diddle in the middle, but if we get a strong response to bounce back up, then that opens up for all sorts of things. So we come down to here, we open up for an inside break, which can rotate lower again, or we have a strong push, a bit of consolidation here. We're obviously back above where this developing yearly is, and then we can push higher again. So we're imbalanced up, so we need to remain bullish as of today. We have reasons to be rotational, but we're going to remain bullish on this because it's what it's telling us, and it's where we're currently sitting. We can't deny that it's been a bad close. It's a close of indecision. So we'll move on to our next stepping down the time frames to basically see what happened. This is how we can sort of go down and narrow intraday trading, as well as having potential areas to look to go long. So if we come over now to the quarterly, what we can see is the first thing is we have the developing quarterly VWAP, and we also have the previous quarter, to see where that tag is, the previous quarter value area high that comes through over here, through this level down through here. We can see that we had some wicks that held us off from here, but what is looking a little bit nasty at the moment, and this is also what also you can see creates the indecision in the market to potentially go sideways, is the developing quarterly value area high. We tried to shoot back above. We basically rejected again off this HV point of control. We have the new one in here now, as we know, but we have two solid closes starting to gain acceptance back within the quarterly value area high, which isn't ideally what we want to see. So with this, even if this was a green candle up to here within the next 11 hours and 40 minutes, if we put another wick in, or we get another close in here, it's really starting to show that the bears are starting to take some control, which could lead us to coming back down and retesting this previous quarter value area high, taking out some of these equal lows in the lower time frame. There's quite a few equal lows down through here as well. There's some price action things and whatnot as well, as to a reason. Market structure as well is basically gets broken once we start closing below this area here as well. But just looking at this at the moment, we now know that we are and starting to not fully confirm, but a day's worth of closing within the developing quarterly value area high makes us rotational between these two areas, with the potential, as always, that the developing quarterly VWAP can offer a spring back up to this level. Okay, now obviously when we get to here, that is the inflection point to be looking for rejections lower or strength higher, where we can retest and push back up. And in this case, if this is the situation that happens, then we have to deal with this. So something that could happen, and what I would look for is, let's say we do rotate back down to the developing quarterly, we clean out some of these lows, we have an attempted market structure shift below these lows, and we do wick below, we reclaim, and we haven't come up and filled out this gap through here. It's always just looking at hypotheticals of the potential of coming up, tapping that as the point that comes back down, holding the developing quarterly value area high. Wherever that's situated at the time is dependent. Could have rolled back down a little bit lower, but back off that inflection point again, and then we can head back up higher. So these are just some of the ideas you're coming up, but you're aware of the idea. It doesn't mean it's going to happen, because obviously this could be the short today, this could be the short today, this could be the long, this could actually just fall straight through. So each time we just know that this is an important point, this is an important point, this is an important point, and obviously this is mindful of where that will be, but this is the low grade. Like we know it's there, but we don't care much for it. This is the most important area on the chart, in my opinion, especially if you're going long, like a good long. And the reason for that is, we're balanced with him. But if we head down now to the, this is the monthly. Now we can have a little bit of a look at what's going on. We can see that the market structure, as we've come up at the moment, is we've basically made a high here, a higher low, a higher high, then we haven't actually broken the bottom of this structure. Therefore, we're internally trading within. So there's no market structure break. So this here at the moment is not a lower high. It's just internal structure. This here is internal structure. This here is internal structure. So it's not until this higher highs low gets taken out that we need to start being concerned about a change in structure and the fact that we could really start to roll over like this. Now, of course, anything can happen, but we're just going off those basic principles and applying this as well. What we can start looking into here is when I said to you an important part of the chart is going to be these lows the previous quarter. As well as that though, with these lows, you know, we've got the developing monthly VWAP. Now, obviously, as you guys know, through here, there was wicks lower than the developing the previous monthly, which we hung on to just the previous month value area high. You can see it rejected here, but each time you see it, we dip through levels. We don't. It's not every now and then you'll get like these sort of perfect or closer to perfect inflection points that you can take trades off, but it's less common than actually having a bit of trading go through a level. So why I'm saying that is the developing monthly, yes, at the moment, if this starts coming down, it's probably stopped going to rising up. It'll go sideways. But nonetheless, what we'll see is that area through there and the previous month VWAP. So pretty much this rejection block, instead of getting blocks, but this rejection block, even the 50% of it down through here, lining up with somewhat of the 50% of this FVG as well, previous month VWAP. If we do have a sell-off, well, what's going to happen is when we get to here, the responsive buyer is going to have to push very, very hard to make sure that we don't get closes or a close below here, because a close below here, even once it gets a close or some closes, then we can start looking at things like, you know, say it was quite a savage Asia drop from now. What we're going to do is we're going to get this will become a breaker block. You know, now if this gets traded in heavily, I'm not going to count it. But if it fell through it, again, a hypothetical of just thinking about things that could happen in the market. You know, we've accepted back inside the quarterly developing, we've accepted inside the developing monthly value area. We're now going to be thinking about this of ways if we come back down, the bulls really don't want to have a clear market structure break, because it comes back up, it'll find the previous month value area high lined up with the actual body of this breaker, and then we can roll down and we can start seeing us head back down towards the area I said before that's not even on our radar, but it becomes real after that. So ideally what we'd want to see, and this is one of these times where it's, you know, we're looking for one of those law twos, sort of off this previous month VWAP area, or even a little bit higher as well. So obviously like bouncing, not even taking out the low and just bouncing sort of within this area again to front run all those people that are trying to get the obvious trade down through here. It really just comes down to the selling pressure. A lot of the time it's the liquidations. A lot of people will try and front run a level, especially spot, because they'd rather just get in, you know, a percent higher, 2% higher in the scheme of how far this thing's going to run. So they'll start front running early, but it's just sort of the perp market and stuff that's liquidating that sends us down into those sort of deeper discount levels where we can start coming in and start sniping up, you know, with inside buys, with inside these sort of wicks here. So just having a quick look at this as well. We are currently open back within the developing monthly value area high. Can we reclaim it within the next 4 hours and be above it again? Absolutely. It's not exactly clean through this area. It's pretty choppy. It's inside, you know, trading with inside this range through here. So if I were just to put a range through here, this is literally the inside range. We sort of said earlier on that we have on the daily that inside candle. So it's pretty much from here to here. So it's tightening up even more at the moment. So we have a narrowing price action. So we can see from between here and through here, that's our daily inside candle. So basically everything within this area here today is a possibility. And that actually just goes with the character of the fact of the developing monthly value area. You can see how much we deviate above and below that area, and just how little it's currently actually getting respected to a T. Whereas you'll find other times, you know, it's not so volatile, and you'll have like, you know, a little bit more respect of an area of a level, or like this previous level where you get these cleaner rejections, or it's a lot cleaner. So obviously that's going to make trading this sort of thing a little bit harder. You need to be a little bit more patient with the volatility that's currently in here. And obviously you can see it's been a lot of high over the New York session, but a lot of high volume points of control where we just sort of push straight through them with, heavier liquidations or heavier buying and that sort of thing. And now obviously in the Asia session, we'll probably cool off a little bit. But nonetheless, what are we seeing? Developing monthly, we're balanced, but the previous monthly value area high, which is a bit of a line in the sand moving forward from here, is obviously still trying to hold. But each time we're heading up, we are struggling to make ground. So it's compressing inwards at the moment. So, there's a lot of news and whatnot going on at the moment with the Bitcoin reserve and documents coming in and that sort of thing. So that's making it so a lot of big players are sort of either sidelined or they're punting, and that's creating this high volatility that can really, really chop people up if they don't know what they're doing. So we just keep it really simple. At the moment, we have a bit of a line in the sand that we don't really want to go below there, but nonetheless, we have this hypothetical that we potentially could lose it for a little bit and come down and hit that previous month VWAP to scare everyone and actually get a sweep of that market structure low. So we're moving over now to the weekly. So we're just zooming in even more on the 30-minute at the moment through here. And you can see how much the previous week's value area is not an inflection point from this point here. So why I say that? Well, you can see at times where it will just be a lot clearer. You're gonna be getting these deviations below it, and that's just the way it is. That's why we add these extra bands on. The bands are giving you more of those sniper positions. Other times, if you're more conservative, you will be waiting for a reclaim. You're going to see how, like, when we've come into this previous value area, pretty much got a retest, rolled straight over. Here's where you close, come back up to the VWAP, it compressed down into the level, fell through, and then it was also the developing weekly that was holding it down. And it was pretty much this point here is once we actually got acceptance back within this area and also acceptance within the developing value area, we've come up, and from there we've tried to hold on. But I actually made a little post the other day about knowing when to cut a trade. It doesn't matter if it's on the 1 minute or if it's on dailies or whatever, is when we see that we are struggling to move back away. So this was promising with this HV POC that went through here, but as you can see, as we moved off and tested out, open up a new value, we've rolled again. So we can just see that if we're not even hitting the VWAP, we should be up here and doing this. If we're just chewing along sideways like this, then there's a high chance that it's weak, and we might want to reconsider our position until something more clear comes up, if that makes sense. So at the moment, you can see it's this level is acting more like an oscillating point of control or something, rather than a level that would want to be taking trades off. Because if you were taking trades off it, you'd get absolutely chewed up. And where we were back there again. So two things at the moment to see. This also goes with the inside candle, the inside range of market structure. It's predicting that today's going to be that sort of choppy inside day without looking at the time price to opportunity. We can see that we are at the developing weekly VWAP, and we're at the previous week value area high, as I said, because at the moment this thing is just chopping in and out of it, and it's not really respecting it much off this continuation block over here. We do just expect more chop until something clear comes up. So I'll be using TPO to be looking at the previous day value areas for intraday trades, not actually taking anything strong. And again, ideally, I would like to see, as we said, this is pretty much the market structure low to break. But we also do have the previous week VWAP, which is pretty much naked, and the week before's value area high. So I was talking about specifically on here to the 90, say call it 98,500, and if we look at 98,500 on this chart here, it comes down pretty much to the previous week VWAP and the week before value area high, right below that point there where we could get a wick. So this would be perfect if when we do come down, that is an area down through here. So if we just say we come over to the previous week VWAP, maybe a little bit higher around here. And if I just add an alert on my Bitcoin, which I have now, I'll get a message on my phone. I can go and live my life. And then I know within that area to do business. And then we can use that lower time frame stuff 5-minute strategies that we've shown you, like the DR strategy, the trend reversal charts, or just a normal footprint chart, showing you for those trap traders, high liquidations, and where the interest is actually coming back in, where the fear is maximizing, people are starting to throw their money at the smart money and selling for losses and all that sort of silly kind of stuff. So looking at this objectively again, what is the main thing that we are doing, which again goes with the inside trading of that whole since the high to this recent low that we're eyeing off, is we've just been oscillating. We're basically, you know, some people could start drawing triangles and all sorts of things if that's what you want to do. I can see it. I don't need to draw it. I can see prices compressing, and we are balanced. We're pretty much remaining balanced within the developing weekly value area. We're getting very narrow, and we're remaining balanced with inside there. Each time we come to the POC, we can see that there's a little bit of something that goes on, like so. POC, VWAP, sorry, I'm just going to say things interchangeably. And we're just rotating between there. So you can see each time we've come up so far, we haven't gone to any of the standard deviations higher, but we have been coming down to the standard deviations lower. So we've come down to the second, we sort of front ran this one here, where I got my long entry yesterday. Which was in my head, I was sort of like, I don't know, I would like to see that tap. But you'll see so many times anyway where these lines here, they don't always, they get front run a little bit. So it's more just, I'm looking at other things to actually take the trade entry. I'm not necessarily always going to say it has to hit a level, but nonetheless, we can see, you know, like we're below value, we get a 9 come in, it's hit like a 1.5 standard deviation. This one is not a 2, I apologize. And the second below is a negative standard deviation of 2 from the VWAP. But you can see we get like a 9, and then we push back up again. We see we get a 9 at the top, we push down again. So the TD, Tom DeMark sequential indicator, or the slightly modified one, which is the count to 9. We're just looking really cleanly for when a trend has created the condition of a 9 setup, that we need to be aware that we can be rotating each time that we're getting that 9 set up. So, you know, we go through in the course and in the Discord, we go through a fair bit of how to apply that to your chart as well. Just adding those extra levels of confluence. So at the moment, what are we? We are trying to remain imbalanced up off the previous weekly. We're trying really, really hard. However, it is struggling at the moment, as we can see. And the developing band at the moment is offering us that internal trade. Each time we're below, we're looking for longs. Each time we're hitting the highs, we're looking for shorts. It's pretty much, that's the mechanical approach to it. There's nothing more to it. There's no way I hope this thing goes to 150K today. There's no, this thing's off to, you know, bloody 60K. There's none of that. I don't need to be looking at any of that. Higher time frames, does not hurt to go and have some really high time frame, you know, jump on the monthly, look at the order blocks. If we come back here, these if statements, I'm aware of it. I have an alert set for it. Perfect, great, future-proofing yourself, because the last thing you want is a heavy pump or a heavy dump and you're left going scrambling for TA. Like, what am I doing? Where am I trying to do TA while the heat of the market's making you flustered? So it's still good to have those higher time frames, but just looking closely using the LTVW, we can have a little bit of an idea of where we're going to be taking the trades, where we're going to be getting out of the trades for our take profits, what we're going to leave to run, and just the actual health. So the narrative of the market is what we've just gone through at the moment. So again, we can see that we are trying to hold on to the developing yearly value very high in an imbalanced up state. We can see wicks and bodies have closed below it before. So can we actually take it serious? No. If we had wicks above this and then today it was like fully closes below it, then you'd take that more seriously. But because we've had these full on closes below it and reclaimed, you can be a little bit more lenient. You can say that level now on the yearly is an area, a volatile area. It's not exactly just that pinpoint line that you're seeing there. And we can isolate again. So we're coming down through here. So this does tell me a slightly different story. But if this closes in 11 hours and 20 minutes green up through here, then all of a sudden, yet again, it was another one of these sort of like little deviations lower. So developing is just telling us the health, and the health of it at the moment is 50-50. You know, middle of the range, VWAPs, etc. I'm not going to be taking a short right here just because of that. The shorts were up here, and the longs are obviously towards these lows at the moment. That's just looking at that. And again, we're just zooming in each time. The reason why the yearly, quarterly, and monthly at the moment are actually all the same is because, you know, we've had the new year come through. So until April is when the quarterly will split away from the yearly, and until February, the monthly will start to deviate away from the yearly and quarterly as it stands at the moment. So hopefully that's cleared that up a little bit as to what we're looking at just on the LTVW. Now what we'll do is we would move over to the section of the TPO chart. So the TPO chart, for people who, you know, are just getting used to it and getting into it, this is daily. Every single one of these profiles are daily, okay? Now, this is showing me sort of like volume profile. This is time-based, but it's also using some volume profile POCs and value areas and whatnot. So it's a bit of a hybrid mix between time and price. I'm able to actually look at these areas and see where price spent the most time, where the most volume was. So we can see if there's discrepancies between the two. The biggest thing is the composites out of these. Now let's start with something that's going to be more familiar. If I add on candles, all of a sudden, you're probably thinking to yourself, oh, that's better. I actually understand this. Why am I using these charts and not the candles? Well, if you're just looking at candles, there's so many order blocks and wicks and that sort of thing. It's, you know, you can add your volume profile over it. It just starts to show just so many of these little areas that, oh, it could do this or it could do that. Whereas when we take away these candles and we can just look at these things from a solid profile, we can have a look at the P shapes, the B shapes, the double distribution days, the where we opened within the day before, where we opened within the composite and that sort of thing. So the same as getting the candles is you can right click if you're using XO and you can actually go to, you can expand the clusters and that's going to still give me the way that the candles moved within that day. And then I can just close them off again and I can actually see the day type where we're trading. So let's also now do composites because we need to update this composite. So this gray box is a 6-day composite, but there's two ways to do it. I can merge them individually or I can merge. So I want to merge this profile and I want to merge it by 6 days. And what that's going to do is it's going to bring it all the way back over here. Now I'm going to get my box. I'm going to unlock it and I'm going to go from the value area low to the value area high. That's actually moved up now. So it tells me a little bit of a value migration higher, which is in some way it's still bullish because we're still moving upwards and the perceived value of rotation has moved higher. Therefore, that just told me a little narrative there, a little, hang on, we are still moving higher. I can then reset the TPOs and I'll always lock it because the amount of times that I'll bump this thing, I'll now use a little lock button up here. I now have 7 days. So 1, 2, 3, 4, 5, 6, 7 days of overlapping value. And again, like a different way of doing it, if you don't merge the X profiles, you can just go through individually and merge them like so. And we can see a pretty even D-shaped profile. So if this was more of a P in the high and we're opening down here, it's pretty yuck. If it's a P in the high and we're opening up here, it's good because it's trending. Won't go through MM3, you want to learn all these, remember all these, but the main thing is we're opening right in the middle, pretty much in the middle of a D-shaped profile. So what would we expect with inside a D-shaped profile? Well, essentially what we're expecting is just continued rotations. If we're opening below, we're looking for responsive buyers to step in, buying opportunity. If we're opening above, we're looking at a potential short, okay? Because it's a D-shaped profile, it's nothing clear on what we're doing. But as we know at the moment is, and this goes to the rules that we teach in MM3 as well, is if we get a really clean break with singles either way, that is the clear sign of a 7-day movement away from value where we don't want to fade that. And we'll be looking at, if we are not in, we'll be looking at the single prints to hold and potentially to head higher or lower, depending on where those single prints go. But while we continue to range in here, we can unsplit this box again and we can just say, all right, so that's the duration. We're still within inside this. There's no single prints. There's nothing really saying much besides we can start breaking this down now and having a bit of a look at the more recent price action to get an idea of the potential of where things are going. So I also have it's volume profile, but I'm using Delta. Before I jump into this, on your TPO, you can choose show volume profile or you can turn it on and off. Now with my volume profile, if I go to the settings, if you want to just take a screenshot of this, or I can post it into the community, what I'm doing is I'm using the percentage of the delta. So I'm using delta with a delta percentage. So it's basically the market buying and selling difference. And from there, what I can do is how I got my short yesterday morning, for an example, was we opened just below, with inside value, okay? So what I like is when we open the edges, opening within the middle of a profile like we have today, it's a bit boring. Basically, I'm not really doing anything at the moment. And where are we? We're at the VWAPs and that weekly that's just acting like a point of control. It's not acting like an area of an inflection that I want to do business. So what happened here? Well, if we zoom in, I'll just pull this up so we can try and make it clear on the screen, is we opened just within the bottom of value, okay? But we had this high volume, we had these sellers in this sort of higher volume delta of where people had just been buying through here. So the idea here was we've opened below the point of control, we've opened below a lot of this value here, and we can see there's a lot of buying here and a lot of buying here. So the idea in my mind is we come back up to these guys and they get out, and that's exactly what happens. So you take your short and then you start to fall down lower. We also opened with inside this day's value. So a quick target was obviously to this value area low, but what is the main reason why I wanted to go all the way down here? Now it's a 6-day yesterday, so I've already changed it. It was actually a little bit lower. It was right here. So I'm just going to go where the 6-day value was. It was about this point here. So the idea was we had this, let me expand this as well. And let me expand this one as well. So you can see that we had above the 6-day, it was a bit lower as well. So it was here. We had through this level here, we tried to get higher, and it's a failed auction. So we've closed, we've retested, and we've rolled over. So the goal of, as you know, with any value, whether it's recency or duration, is when you have a failed auction, the goal is to get back to the other side of it. That is the goal. It doesn't always happen. There could be a really strong point of control, and we could have bounced here, pushed up, and then we could have attempted lower again or higher. This is just the mechanical rules of all of this. But essentially what's happened is we expected lower, and that's exactly where we went. So what made me more confident about this not just being a random part on a chart to go short is the fact that we had that day rejected, finished the failed auction, came down like a little bit lower than the midpoint of the chart with a fair bit of volume above, a lot of short sellers, a lot of buyers that were now underwater. The first lot of buyers are obviously just going to get out, and then we rotated lower. Now, so that's pretty clear what then ended up happening. I put a post in the Discord as well saying, hey, like we're rotational within this 6-day profile. We're looking to take longs. Took a long. I wrote it up to this was a naked point of control. It went a lot higher. I was asleep. I'm still happy I got it. Rotates up. What does it do? Puts another failed auction in. Where's the target really for this? Back down here again. Does it always hit it? It doesn't always hit it, but you know, we've sort of essentially put another failed auction in. So that it really is saying, hey, like it wants to come back down to this level again. It's just mechanically that is the rule. It doesn't have to, but that is just sort of setting a little bit of a bias. It starts building things in my head like, well, this is saying up and this is saying down. If I get too much of this is up and this is down, then I'm better not to trade. But if I start really building like yesterday's short was really clear of like we failed, we fell through, we had lots of longs on the upper side of this thing, go short. Now, if I was looking at this on a candlestick chart, I'm not getting that same thing. I'm seeing little order blocks and FVGs everywhere, and I'm like, oh, do I get in here? Oh, maybe not. I get hesitant. And so this is where really this thing is an absolute weapon. So let's actually start analyzing what we have at the moment. So we've pretty much opened up within, again, 7-day profile, which is rotational. Then we're also going to be now looking at where do we open in respect to yesterday. So we open a little bit lower. We've got some buying, obviously down through here at the moment that they might try and continue to support. We also have selling. We have some buying up through here. We have a lot of time spent down through here with a lot of sellers offside. So this obviously each time as it comes down, this is a mixture of people who actually closed and a mixture of people who open and that sort of thing. So further flow investigation needs to take place on footprint charts and stuff if you want to see exactly open interest, like those who are offside, those who are onside, those who just got liquidated. So this is just it's not exactly the clearest thing to go off, but it just gives you an idea of like where the selling's taken place, where the buying's taken place, and as you watch it live as well. So as this IB, the initial balance, the first 30 minutes is coming in today, we can have a little bit of an idea and get a bit of a gist of what's going on. Like, you know, there's a lot of selling up through here, a little bit of buying down through here. And obviously the buying's coming off the value area low developing, and the value area highs. Obviously, we've got a few trap buys up through here as well, opening rotational within the previous day value area. And we opened just above yesterday's IB as well, so we could be rotating within that as well. So there's a few levels to be looking at, but nonetheless, the main thing that I'll be looking at today, as we've opened rotational, is this value area low down through here at we'll call it 102,930, and then obviously the value area high comes in with 108 million buys, so we know that's going to be a heavy resistance point. There's always the excess as well, so the excess in this case also gives us a bit of a conviction that there's a lot of supply up through here that's pushed it down, and obviously we rotated. We look at this, we can see that we've rotated pretty much back down to this low again, but there is a high chance that we probably will come back down again. We may not, but nonetheless, I'm looking for these inflection points. So this low, this high, point of control will only really be something I care about if something's obvious with some other TA if I want to take a trade there, but generally not a good place to take a trade like a VWAP. Say I get long through here, I'm expecting a rotation. I would still be looking for things like this area, this thin spot through here to take some profit, just because the sheer amount of longs that will want to get out. The point of control as well, I'll be looking at that. And then, yeah, obviously the value area highs, obviously we'll be looking between here and here to take out the rest of it. I'm not really looking to go that much higher. There is a naked value area high here as well, but by this time up through here, I'm not looking at longs. I'll just be looking at thinning out. And I can always leave a little bit to run because there's no pull high, and there is a naked point of control up through here as well. So you're going to see the anomalies as we go, but this is just if. But for now, we know that between this point here and this point here, we're rotational, and we know on the bigger scheme of things, between this point here and this point here, we're rotational. And that's pretty much all that matters at the moment. So looking for that value area low. Then what I'll do though is when I find that value area low, I'll look at the LTVWs, naked price action, footprint charts, had my alerts set, then I'll go over, I'll bring those levels over as well onto my trend reversal chart. And then through here, you can start to see, like where you'll be looking for like those like the same as TPO. You'll be looking for your B-shaped profiles, your P-shaped profiles, your continuation profiles, all that sort of thing. So if I, for an example, zoom in on this low down through here, we can see that we had a lot of open interest dropping, a lot of selling into the low. Then we had an increase in open interest. And then we had a total delta of negative 4.6 settled of sellers. And that was into this B-shaped profile. We closed above the point of control. We reclaimed this level through here. We had a little bit of a retest of this lower level, and then we took off. So that would be the same. This kind of technical analysis, flow analysis, is going to be the exact same as when we get to one of these inflection points, which I can pretty much just sit here all day with this chart open and wait for price to get there. Okay, so pretty straightforward. Open with inside value of both, expecting more of the same until proven otherwise. Pretty straightforward, nothing too exciting, just with this inside day at the moment. So another thing we'll do as well is then we'd go over to the to these higher time frame charts. These are the weekly ones. So these profiles here are the same as what you just saw, but every single profile represents 1 week over 1 day. So we can see 1, 2, 3, 4, 5, 6, 7, 8 days. I believe it's 8 days. Let me check. 8 days. Don't know why, as I said, why that one's moved slightly. But you can see here we had 8 days before we actually pushed out of this old profile. We swept this low, essentially. We did have the buy tail. We swept the low, we pushed back out of the profile, we reclaimed it, we expanded it, we can actually see what it did. Just nice big V-shaped recovery. And then as we came up, we had a little bit of a rotation traversion. You can see where people took profit at the height of that 7 weekly value. We come back down to the point of control where there was a cluster of activity, and we've pushed up. And since we've got this nice solid this week retest that's gone in off this as well, which is a little bit of a tick in the box. We've got a little bit of an internal pull low as well. I'm just mindful of it. Doesn't mean it has to be taken, but I am mindful of it, that we could come down and sweep this low one more time, get another tag in here, push up to an all-time high. And we're basically just rotating again with inside the previous week profile, and trying to just hold up essentially we're holding up off the open of last week, which I mentioned yesterday as well when I took my long, that we were also at the weekly open as well. So the value, we're just rotating between the developing, rotating between the previous week value. Ideally, we'd like to see a close above this to start trending. Otherwise, we open again, we're just rotational again until we continue. And like the daily, we get a break. So the observation at the moment is we do have a sell tail, but in a developing, when it's developing, you can't really confirm it as a sell tail until it closes, because anything can sort of happen when something's developing, like a developing band versus a previous band. We put more weight in the previous bands. We did shoot through this sell tail over here, which is pretty bullish. Obviously news and a lot's happened lately though. So just being aware of that internal pull low, but again, nothing too exciting, just rotational between this area at the moment on the weekly. But we are holding above the composite. No crazy single prints giving us the thumbs up to go ahead. And then we can go over to the monthly as well. Just quickly, we'll finish up on this one here. Hopefully that will be enough to enough information for you guys to go off. All right, so we have over here, we have basically with the more than 50% of the 2 monthly. These profiles are now monthly. I'm sure you get it dailies before, and then we had the weeklies. Now each one of these represents 1 month. We merge these two together, and what we're actually getting here now is we're getting this 2 month composite. And we can see here, it was in one of my preps. That's why I actually marked that yellow line. There was probably another reason in one of my preps as to why I marked that yellow line. Oh, that's right. That was the weekly single print area as well, and probably a few other bits and pieces. So we expand the cluster. We can see that we open rotational. We have done a mechanical short. We've come all the way down, mechanical long. And now the observation here is there is a ledge or an internal pull low, which is the same as the weekly one we looked at. Doesn't mean anything. It can remain that, but it's just an observation. But just as of these daily, so as of yesterday, we did open yet again back up above the 2 month VA, which comes in around that 101,700 mark. So the fact is we are still remaining above there. We are compressing. As far as we compress above here, we can continue and we can push higher. If we sort of went off what we're talking about, taking out the market structure low with a SFP, that would be repairing that pull low. So just see how it all starts to come together, mixing the LTVW, naked price action, and the TPO. So hopefully that was enough insight at the moment, just sort of going through the prep and sort of things I'm looking at when I'm trading, how I'm finding these inflection points in finishing. Obviously, something like a bit of practice that you can do, especially if you're not yet up to using footprint charts. That's where I'll put a lot of my levels, because that's what I'm going to be executing off. That's where I'm going to be getting in as close as I can with the closest invalidations to create massive R trades. But for those who are not up to this, but maybe you're having a bit of a look at TPO, you're interested in into the footprint charts, I would be taking these levels. So you just come over there and you highlight it and you go, okay, where's the value area low? And you say, yeah, so if you say 102,930, go put that on your chart. Just go whack that ray on your chart. Then, put the composites in as well. So the current 7-day composite is coming in at 102,000. The value area high of that composite's coming in at 106,000. Previous day value area high, 106,000. Very strong level there. Put that on your chart, set your alerts, a couple of $100 away so you can be at your computer all ready to go. Go and live your life. All right, guys. Well, thanks for your time. Yeah, any questions, jump in the Market Masters community, and thanks for watching.